my dear students. I welcome you all in the world of accountancy. Today, I am going to take the next unit of accountancy, accounting for goods and service tax. That is GST. So, shall we start? Goods and service tax. G means goods, S means services, T means tax, and it is a common tax for goods and services. GST Act was passed in the Parliament on 24th March 2017 and it came into effect from 1st July 2017. Goods. Goods are provided by dealers and manufacturers. Services are provided by service providers. And this tax is common all over the India. Earlier, there were two types of taxes, direct tax and indirect tax. Direct tax is a tax which pays from the person's pocket. Example, income tax. But indirect tax is that tax in which person collects tax from customers and pays to the government. Example, VAT, service tax. But now all the indirect taxes are converted into one tax, that is GST, because the purpose of GST is one nation, one tax. Taxes which were replaced and taxes which are same. Now, different types of GST. GST is divided into three types: CGST, SGST and IGST. CGST stands for Central Goods and Service Tax. SGST stands for State Goods and Service Tax. And IGST is Integrated Goods and Service Tax. CGST and SGST are collected by state and central government and IGST collected by central government. Now, the GST rate structure. Goods and services are divided into 5 slabs for collection of GST. Essential items including food 0%, common use items 5%, standard rate 12%, maximum goods and services standard rate 18%, luxury items 28%. Now, GST is paid on purchase of goods and services and it is collected from customers on sale of goods and services. GST paid is termed as input GST and GST collected is termed as output GST. Input GST and output GST. When we paid something, then it is considered as input GST, and when we collect something, then it is considered as output GST. Accounting procedure in case of Intrastate supply of goods and services. For purchase of goods, entry will be purchases account debit, input CGST account debit, input SGST account debit to bank or the creditors if goods are purchased on credit. For sale of goods, entry will be bank account debit if sale is in cash, and if it is on credit basis then debtors debit to output CGST account, to output SGST account, to sales account. For purchase return, RAM debit to input CGST account, to input SGST account, to purchase return account, as RAM is in our example. For sales return account debit, output CGST account debit, output SGST account debit to RAM. For purchase of fixed assets, fixed assets account debit, input CGST account debit, input SGST account debit to bank account. For expenses, as we paid expenses, then expenses debit, input CGST account debit, input SGST account debit to bank account. For incomes, as we received income, so output CGST and SGST will be there. Bank account debit to output CGST account, to output SGST account, to income account. For goods withdrawn for personal use or goods given as samples, loss of goods by fire or goods stolen. Drawings account debit, advertising account debit, loss by fire account debit, loss by theft account debit, to input CGST account, to input SGST account, to purchases account. I think the concept is clear to you. Thank you. Have a nice day.